Picture this. You walk into a vault, a massive industrial-scale vault somewhere deep in the financial heart of New York City. The lights are cold, the walls are thick steel, and the shelves that once held millions of ounces of physical silver are sitting there, quiet, dim, and half empty. Nobody is panicking. Nobody is sounding any alarms. The news isn't running a ticker. CNBC isn't cutting away for a breaking segment. The mainstream financial world is completely silent. And yet right now, as you watch this video, something is happening in the global silver market that is so historically significant, so mathematically alarming, that when it finally catches the attention of the broader market, the price of silver may never look the same again. We're talking about a supply deficit so large, so persistent, and so structurally entrenched that it has already quietly erased 90 million ounces of silver from global above-ground inventory. And almost nobody in the financial media is talking about it. Not seriously, not loudly, not the way they should be. Today that changes. Stay with me to the very end of this video, because by the time we're done, you're going to understand something about silver that the average investor simply doesn't know. And that gap in knowledge may be one of the most important financial opportunities hiding in plain sight right now. If you're new to the channel, welcome to John AG 1.0. We dig into the stories behind the assets, the numbers behind the headlines, and the dynamics that move real wealth over time. If you've been here before, you already know we don't do surface-level takes. So do me a favor, hit that like button right now, and if you haven't subscribed yet, go ahead and do that. It's free, it costs you nothing, and it helps us keep making content like this for people who actually want to understand the financial world more deeply. Now, let's talk about silver. And let's start with a number that should stop you cold. $88. At the time of this video, silver is hovering in that range, a price that, if you zoom out, looks impressive compared to the $15 and $16 levels we saw just a few years ago. But here's the thing, that price isn't telling you the real story, because in the world of commodities, price and value are not always the same thing. Price is what the market is paying right now. Value is what something is actually worth based on supply, demand, industrial necessity, and long-term scarcity. And right now, those two numbers for silver are dangerously far apart. To understand why, we have to go back, not years, but decades, and trace the slow-building storm that has been gathering in the global silver market for a very long time. Silver has always been a dual-use asset. On one side, it's a monetary metal. For thousands of years, civilizations used it as currency. Even today, people hold physical silver as a store of value, as a hedge against inflation, as financial insurance. But on the other side, and this is the side that most people completely overlook, silver is one of the most industrially critical metals on the planet. Not because of tradition, not because of sentiment, but because of physics. Silver conducts electricity better than any other metal on Earth. It's not second best. It's not close second. It is the best. And in a world that is electrifying at an absolutely unprecedented pace, that fact matters enormously. Think about what's happening right now in the global economy. Solar panels, electric vehicles, advanced electronics, medical imaging, defense systems. Every single one of these industries uses silver in ways that cannot be easily substituted. Each solar panel contains somewhere between 15 and 20 grams of silver. Each electric vehicle contains significantly more silver than a traditional combustion engine car. And the world isn't building fewer of these things. We're building more, aggressively more. The International Energy Agency and multiple independent research organizations have all published projections showing that industrial silver demand is going to continue climbing, not declining. We're not at the peak of this demand curve. We might still be on the early slope of it. So now we have the demand picture, and it's a strong one. But here's where the story gets genuinely alarming. Because on the supply side, the picture is almost the mirror opposite. Silver production is not keeping pace. New silver mines take years, sometimes over a decade, to move from exploration and discovery through permitting, development, and finally into production. And the ore grades being mined today are generally lower than what was being pulled from the earth a generation ago. That means you have to process more rock to get the same amount of silver. That costs more money, takes more energy, and produces more environmental impact, all of which creates its own friction in the development of new supply. The Silver Institute, one of the most credible tracking organizations for global silver data, has published findings showing that the silver market ran a structural supply deficit in recent years, meaning global demand exceeded global production. Now here's what that phrase, supply deficit, actually means when you translate it from financial jargon into real-world terms. It means the world consumed more silver than it produced. And when that happens in any commodity, the gap has to come from somewhere. It gets filled by drawing down existing stockpiles, by pulling silver out of above-ground inventory, by consuming reserves that took decades to accumulate. And that is exactly what has been happening, to the tune of an estimated 90 million ounces of silver that have quietly vanished from tracked global inventories. 90 million ounces. That number needs a moment to land. That's not a small adjustment, that's not a minor fluctuation. That is a generational drawdown of a resource that powers the modern technological world. And yet the price of silver at $88 an ounce is not reflecting this reality. Not fully, not yet. You might be wondering, why not? If supply is falling short of demand, shouldn't the price be rocketing higher automatically? And the honest answer is yes, eventually. But markets are not instant calculators. They're made of human beings, institutions, algorithms, and sentiment. They can price in reality slowly, imprecisely, and sometimes very late. And there are structural reasons why silver has historically been slow to fully price in a supply crisis. Part of it is the paper market. Silver trades in massive paper volumes on futures exchanges, contracts that represent silver that may never be physically delivered. This can suppress or delay the price discovery process. Part of it is attention. Gold gets the headlines. Bitcoin gets the headlines. Silver is the quiet metal that tends to be underappreciated by the financial media until it's not, until suddenly everyone realizes the story all at once. And when that moment of collective realization arrives in markets, moves can be sharp, sudden, and substantial. History has shown this repeatedly. In 1979 and 1980, silver ran from around $6 an ounce to nearly $50 in a matter of months. In 2011, it ran from around $18 to nearly $50 in less than a year. Each of those moves was driven by a combination of investment demand, fear, and a sudden awakening to the supply-demand dynamics that had been quietly building in the background. The question we're facing today is whether we're in a similar build-up period, and whether the 90 million-ounce inventory drawdown is the canary in the coal mine that tells us the next move is being loaded. Now, to be clear, and this matters, predicting the exact timing or magnitude of any market move is not something any honest analyst will claim to do with precision. Markets are complex. There are variables we can't fully see or model. Macroeconomic conditions, Federal Reserve policy, global recession risk, geopolitical events, all of these can accelerate, delay, or alter the trajectory of commodity prices. But here's what we can say with confidence. The structural story of silver, the widening gap between industrial demand and available supply, is real, it is documented, and it is not going away. In fact, as electrification of the global economy continues to accelerate, the demand pressure on silver is likely to intensify, not ease. And this brings us to what might be the most important question any investor can ask right now. What happens when the world's fastest-growing industries, solar energy, electric transportation, advanced electronics, all continue to scale their silver consumption while the inventories that have been cushioning the shortfall continue to shrink? At some point, the math becomes unavoidable. At some point, the price has to respond to the physical reality. The only real question is when. And those who understand this story before the broader market fully prices it in are the ones who have positioned themselves ahead of the move. There's something else worth saying here, too. Silver at $88 sounds expensive if you're comparing it to 5 years ago. But in real terms, adjusted for inflation, adjusted for the amount of money that has been printed into the global financial system over the past decade, silver is arguably still undervalued relative to its historical purchasing power. The gold-to-silver ratio, a classic metric for comparing the relative value of the two metals, has historically averaged somewhere in the neighborhood of 60-1. In other words, historically, 1 ounce of gold bought you roughly 60 ounces of silver. At times of peak silver undervaluation, that ratio has stretched to 80, 90, even over 100-1. If that ratio were to compress back toward historical norms, the implied silver price would be dramatically higher than where we sit today. This doesn't mean it happens tomorrow. It doesn't mean it happens on a timeline any of us can pinpoint. But it does mean the structural argument for silver, when you look at the full picture, the supply deficit, the industrial demand surge, the inventory drawdown, the historical ratio analysis, is as compelling as it has been in a long time. Before we wrap up, I want to ask you something directly, and I mean this genuinely. What's your take on silver? Do you hold any physical silver? Are you watching this market? Have you noticed anything in your own research about the supply dynamics we've been discussing today? Drop your thoughts in the comments below. I read every single comment, and the conversations that happen in this community are genuinely some of the most valuable discussions I have about these topics. If this video gave you something to think about, a new angle, a new piece of context, share it with someone who follows the markets. Send it to a friend who invests. Post it in a group where people talk about commodities or hard assets. These conversations matter, and sharing is one of the best ways to help this channel grow so we can keep doing this work. The silver story is one of the most underreported financial narratives of this decade. 90 million ounces gone from global inventory, industrial demand climbing, supply constrained, and a price that, while it has moved, may not yet have fully priced in what is building beneath the surface. Whether you're a long-term investor, someone just starting to learn about hard assets, or simply someone trying to understand the world a little better, the silver market deserves your attention. Not because of speculation, but because of math, physics, and the fundamental reality of a world that runs on electricity, and the one metal that conducts it better than anything else we've ever found. This has been John AG 1.0. Stay informed, stay curious, and we'll see you in the next one.